Welcome to the Riskwiser Zone, the podcast where we dive into the latest developments in the world of stocks and finance. I'm your host, Lewis, and I'm excited to share today's top stories with you. We're seeing a significant shift in the way investors are approaching traditional assets, with a growing trend towards tokenization. Tokenization is the process of converting physical assets into digital tokens that can be traded on blockchain platforms. This trend is not limited to cryptocurrencies. We're now seeing tokenized versions of gold, stocks, and even real estate. In our first story today, we look at the rise of tokenized gold. With gold prices hitting record highs, investors are turning to tokenized versions of the metal as a stable and transparent hedge against volatility. According to recent data, the total capitalization of tokenized gold has grown rapidly in 2025, nearing $3.4 billion. This surge is fueled by institutional demand for stable, asset-backed instruments. Tether, a leading player in the stablecoin market, has launched a new gold-linked token called XAUD0, which represents a fraction of a troy ounce of physical gold held in audited vaults. This move is expected to increase liquidity and accessibility to gold investments, making it easier for investors to diversify their portfolios. While tokenization offers many benefits, including increased efficiency and transparency, it also raises important questions about regulation and oversight. As the market continues to evolve, it's essential to strike a balance between innovation and investor protection. In another related story, we're seeing significant developments in the world of stock tokenization. A company called Lees has received approval to launch a blockchain-based platform for trading tokenized stocks, which could potentially disrupt traditional stock exchanges. This move is seen as a major step towards increasing accessibility and reducing costs for investors. As we explore these stories in more depth, it's clear that the world of finance is undergoing a significant transformation. Tokenization has the potential to democratize access to investment opportunities, but it also requires careful consideration of the risks and challenges involved. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're glad you're still with us as we dive into the world of finance and risk management. In our previous segment, we explored some key concepts that can help you make informed decisions about your investments. Now, let's take a look at what's been happening in the markets. We have two interesting stories to share with you today. First, gold prices have seen a slight decline, but investors are still eyeing the precious metal as a safe haven asset. According to a report by Economic Times, the price of gold has dropped, but it's still considered a good investment opportunity, especially with the auspicious occasion of Dhanteras coming up. For those who may not be familiar, Dhanteras is a significant festival in India that marks the beginning of Diwali celebrations, and it's considered an auspicious time to buy gold. If you're planning to invest in gold, now might be a good time to do so. In other news, Federal Bank has released its quarterly results, posting a 9.6% year-on-year decline in its standalone net profit. However, the bank reported its highest ever net interest income at Rs 2,495 crore, which is a positive sign. The bank's CASA ratio also rose to 31.01%, indicating a growth in deposits. While the decline in net profit might be a concern for some investors, it's essential to look at the bigger picture and consider other factors such as the bank's asset quality, provision coverage ratio, and capital adequacy ratio. It's crucial to remember that investing in the stock market or any other asset class comes with its own set of risks. It's essential to do your research, consult with experts, and make informed decisions based on your financial goals and risk tolerance. At the Riskwiser Zone, we aim to provide you with unbiased and balanced information to help you navigate the complex world of finance. Stay tuned for our final story of the day, right here on the Riskwiser Zone. Welcome back to the Riskwiser Zone. As we wrap up today's show, I'd like to delve into some of the most pressing economic news that's been making waves globally. We've got a tale of two trade talks on our hands, folks, with the US and China engaging in a delicate dance of tariffs, tensions, and tentative truces. Now, let's start with the latest developments. U.S. Treasury Secretary Scott Bessent has announced that the next round of U.S.-China trade talks is set to take place next week in Malaysia. This comes on the heels of a virtual meeting between Bessent and Chinese Vice Premier He Lifeng, which was described as frank and detailed. The two sides are aiming to negotiate down new escalatory measures between the world's two largest economies. But here's the thing. Despite the optimistic tone, there's still plenty of uncertainty surrounding these talks. Just last week, President Trump threatened to drastically hike tariffs on Chinese goods, only to later characterize such a move as not sustainable. Meanwhile, China has been aggressively selling American bonds amid the trade war, which has raised eyebrows among economists. Now, I know some of you might be thinking, Lewis, what's the big deal? Trade talks are just a normal part of international diplomacy, right? And you're not wrong. But the stakes here are high, folks. A full-blown trade war between the US and China could have far-reaching consequences for the global economy. So, let's take a step back and assess the situation objectively. On one hand, we have President Trump expressing optimism that talks with Chinese officials could yield an agreement to defuse the crisis. On the other hand, we have economists like Peter Schiff questioning the validity of Trump's claims about $17 trillion in new investments flowing into the U.S. As your trusted guide through the world of finance and economics, my job is to provide you with a balanced view of the situation. And what I'm seeing here is a complex web of negotiations, tensions, and uncertainties that require careful consideration. So, what's the takeaway from all this? Well, for one, it's clear that the US-China trade relationship remains a critical factor in shaping global economic trends. 2. We need to be cautious about getting too caught up in the rhetoric and posturing from both sides. And 3. As investors, we must remain vigilant and adapt to changing circumstances. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, invest with caution.